Hello, my name is Lutsch, and I'm a licensed realtor and mortgage professional. My office is located in Arlington. I created this presentation to help answer some questions about the home buying process. I hope you find this information helpful. The first thing we'll talk about is, should you rent or buy a home? In home ownership, one of the biggest advantages is your tax benefits. You can write off your property taxes and your interest each year, thus resulting in a larger IRS refund check. You'll also build equity. As you continue to make your mortgage payments month over month, the amount that you owe the mortgage company will be less, thus you'll be building equity in your home. And finally, wealth. When it comes time to sell your home, you can capture that equity. And we'll talk about that here on the next slide. And then when you talk about renting, one of the biggest advantages is it's easier to move. You're on a year-to-year basis, and as long as your lease will allow it, you have the flexibility of being able to move. It's also typically a little bit less expensive. And finally, location. Of course, when you rent a place, you've got a little bit more flexibility in the location of where your apartment will be. Now let's look at buying versus renting over a 10-year period. For this exercise, I'm going to assume that purchase price is going to be $200,000 and that you'll sell the home in 10 years. The appreciation on average in the DFW Metroplex is 5% per year. This means that your $200,000 home in 10 years will be worth an estimated $325,000. The equity in the home, keep in mind that as you continue to make your mortgage payments each month, the amount that you owe the mortgage company is less and less. So in 10 years, you're estimated to owe roughly $156,000. If your house is worth $325,000, then you can anticipate walking away when you sell your home with $169,000. Combine that with the fact that you've got your write-offs. Again, you can write off your property taxes and your interest each year, thus resulting in a larger IRS refund check. When you combine that with the very unique interest property tax credit program that I offer, which is typically around $2,000 per year throughout the life of the loan, increase to your IRS refund check, you're looking at roughly $3,500 per month increase on your IRS refund check. Now let's look at renting. In this example, we're going to assume that your apartment is going to be $1,000 per month. You can anticipate an average rent hike of roughly 3% per year. This will be resulting in $143,220, which you will pay to the landlord, and your equity is zero. When I take into account the equity that you've built in your home over a 10-year period, subtracting anticipated repairs, when you own a home, you're obviously going to have to make some repairs, and when you rent, you don't have to do that. Combine all that together with the property tax credit savings and the equity that you've built, it's estimated to be a whopping $132,768 a month savings over a 10-year period. So, based off this information that I provided to you, and I'm going to assume that since you're watching this video, you probably clicked on one of my Facebook ads or you visited one of my websites, you'd already made the decision that you wanted to purchase a home. One of the most popular questions that is asked of me is, what is the credit score requirement to purchase a home? For my particular company, the credit score requirement is 580. 580 is the minimum middle credit score. So when I say middle, there's Equifax, Experian, and TransUnion. And we're going to take the highest and lowest and throw them out, and we use the middle credit score of 580. So 580 gets you into the game. But typically, I like for my clients to be at least 620 or above. Reason being is because at 620, the interest rate's better, the options are more, you can do down payment assistance, and we'll talk about that later. There's just so many different options that you can do once you get your credit score to 620 or above. The next thing that a lot of people ask me is, well, my credit scores are not 580 and above. I've been working with some credit repair company and I'm not seeing much movement and things just aren't really going very well. So now let's talk a little bit about credit repair and what that looks like. Traditional credit repair, most credit repair companies will slow roll you. What this means is that they want you to be on the hook, so to speak, because every month that you make payments to them, every month that your credit scores are not high enough to qualify, they make money on you. And they do this by typically only disputing a few items each month. This will result in very little improvement, not much. You will see some improvement over a period of time, but again, that's just to keep you going with the process. And their communication is very poor. Whereas with me, you'll always be able to get a hold of me. In my credit repair process, I'm in the mortgage business. I'm in the credit repair business of helping you get your credit scores where you need them to be to help you purchase a home. So we move much, much faster than a traditional credit repair process. We're going to do some things that are going to be a little bit different. We're actually going to add trade lines. So a trade line is an item that's reporting to your credit report. We're going to add positive credit. On average, most of my clients see a credit score increase of 57 points over the first 30 to 45 days. And of course, you can always get a hold of me, as I mentioned a minute ago, because I'm here to help you boost your credit scores. The whole objective for me to help you with your credit is to help you purchase a home. Now let's talk about income and job information. A lot of clients ask me, how much home can they buy? How much can they afford? The first thing you need to know is that I'm going to be using your gross income, not your net income. Next, if you're self-employed or 1099 income, you need to be receiving that type of income for a minimum of 2 years. I'm going to take the average 2-year income to determine what you might qualify for. As a general rule, over an 18 years of experience, I've come to the determination that a household income should be at least $60,000 per year. Reason being is because $60,000 equals $5,000 per month. I can use 50% of the $5,000, which is $2,500. If the purchase price of the home is $200,000, it's reasonable to assume that the mortgage payment would be $1,600. This would leave you with $900 left over to cover things like car payment, student loans, and credit cards. Please keep in mind that these debts do not include things like cell phone and utility bills. And lastly, please let me calculate your income, especially if you're self-employed. There's lots of different options out there, different ways to increase your income to help you qualify to purchase a home. Now let's talk about down payment. There's 4 different mortgage loan programs. The most common one is the FHA loan. Minimum credit score requirement is 580, 3% of the purchase price. This means that you would need to bring $7,000 as a down payment. Very, very easy to qualify for an FHA loan. Conventional loan, typically most clients, 640 or above credit score, 3% down, so again, $200,000. This is a $6,000 down payment. A little bit more difficult to qualify for. You've got VA loan, which is typically credit scores of about 580 to 600. 0 down mortgage, but you need to have military background. And finally, our USDA loan. These are for properties that are in rural locations. 0 down property, and also there's also some income requirements that you must meet. You cannot make typically more than $106,000 as a household income to qualify for a USDA loan. Now there's several different programs that I offer, especially considering the fact that I am a branch manager with Southwest Funding and I'm also a licensed real estate agent. I have the ability to offer you down payment assistance. This is assistance that will typically cover down payment and also can cover some closing costs. As your realtor, I can also negotiate on your behalf and get sellers to cover some of that closing cost for you. Also, as your realtor, if I represent you as a realtor and a loan origination, I will provide some realtor paid closing costs And don't forget about the awesome interest credit tax program that I mentioned earlier, which is a $2,000 per year unique loan program. Lastly, I offer a build-up program. I like to call this your credit. You build a home while we repair your credit. This is a program that's usually reserved for clients that are about 560 or above, have a good household income, and have a really good, solid mortgage game plan in place. You can build a home anywhere in the DFW Metroplex with a traditional builder in a community, such as Beazer Homes, KB Homes, Grand Homes, those types of things. You can sign a contract, and during the process of the house being built, it typically takes about 6 months, we will repair your credit for you and make sure that when the home is finished being built, that your credit is ready to go, you've got enough money saved up, or whatever the reason being that we decided to put you in the build-up program. Great opportunity for my clients to take advantage of this and get a home under contract. And as soon as your credit is ready, you can move into your brand new home. I hope this information has been helpful to you. Here's a picture of my family, the home that we've raised our boys in the last 15 years, and my contact information. I've been in this business for 18 years. The average client has typically a credit score of around 540 and has been turned down by a lender. I can fix credit and I can fix down payment. As long as you have the income, I can help. Give me a call, let's have a conversation and put a home buying game plan together. Have a great day and look forward to hearing from you soon.